Bitcoin represents digital energy. And in that way, if you think hard about it, you realize it represents digital matter too. It's the first time, it's the singularity whereby we open this portal and energy can flow into the digital realm. When Satoshi invented a way to transfer value from me to you without a trusted intermediary, I can send you $1 million, no bank involved.
In an interview with Peter H. Diamandis, the famous entrepreneur and Bitcoin bull Michael Saylor gave a very bullish outlook for Bitcoin and repeated that we are still early on Bitcoin. Meanwhile, Bitcoin jumps after strong US jobs report on Friday, and it's now trading above $21,000. The price of Bitcoin has risen 3.5% over the past 48 hours, trading above $21,000, having traded around $20,600 before the release of the US non-farm payroll data. The largest crypto came perilously close to breaching the $20,000 level early in the week, following the market's negative reaction to the latest monetary policy decision from the Federal Reserve. But to Saylor, all of the short-term micro events and microeconomics are trivial for the long-term health of Bitcoin, as Saylor sees Bitcoin going to $10 million per coin. But before we listen to Saylor, if you are new to the channel or not subscribed, make sure to subscribe so you don't miss any videos.
Let's assume, as you've said, and I completely agree, gold is getting diluted. We said threefold over the course of 100 years. Land and buildings are being taxed and evaporated, if you would, by taxation. So if people start realizing Bitcoin as a strong store of value that isn't dissipating, isn't being taxed, what is you walk through some of the numbers. If it takes a percentage of the store of value of land or gold and so forth, what could be the price of Bitcoin in the future? Not making any guarantees, but
when you think of it as digital gold, then it should replace gold. Gold's worth $10 trillion, and that takes Bitcoin to 500,000. But when you think of it as digital property, like replacing buildings and land and other long storeholds of wealth, then you're up by a factor of 20 or 30 from there. I mean, it should not be. It's much better than digital gold because I can move Bitcoin at the speed of light and I can program it to 1 million transactions an hour on an iPhone or a website. You can't do that with gold. So it's got more utility than gold, which means it's probably worth 20 or 30 trillion if it just replaces the gold. But instead of buying the Fontainebleau Hotel, which is a nice hotel, worth whatever billions in Miami Beach, instead of buying the equivalent amount of Bitcoin, if you bought the Bitcoin, you can move that to any city in the world every hour of the day, compose it, decompose it, recompose it, dematerialize it. And, when there's a nasty tax on it, you can just move yourself to a different jurisdiction where there's a better tax treatment. And if you think of it like that, then it's a multi-$100 trillion asset class. So at 10 trillion, it's 500,000. At 100 trillion, it's 5 million. So I think, we're marching toward $10 trillion, which is, $10 million a coin, which is why Bitcoin enthusiasts see it's just a very great long-term store of value, and it's a great investment idea. Financial assets were having the best year ever. People had great years. I mean, a lot of these hedge fund managers, they had the best year of their life in 2020 or 2021.
yeah.
And Main Street assets were having the worst year in 30 years. And I had a company with $500 million in cash that was dead money. It was idle. It was generating 0% interest. The Federal Reserve said, we're not going to raise interest rates for 4 years. The company's stock was in the tank. At one point, in essence, when we were going through this, our company was valued at $60 a share in cash and $60 a share in the software business. And that was like 1 times revenue. And so, I looked at the world and I said, you know, if the cash is dead money and if our stock is viewed as dead money, we've got a choice between a fast death, a slow death, or we ride out of the castle and we take a risk. Okay, the fast death is I just give the $500 million back to the shareholders in a dividend or a buyback. Now, I knew that wasn't going to save the company because I'd been buying back the stock for the last 5 years. I bought $300 million worth of stock back or something. And the only thing that would happen would be the stock would go from $120 a share to $60 a share. And then all the stock options, the employees would be underwater. Then all the employees would get headhunted away by Amazon and Google and Facebook. And then we wouldn't be able to compete with Microsoft. And, we compete against a company which has more power than God, right? Microsoft, right? Every company on earth is their customer. They're more powerful than all but about a handful of countries on this earth. And they can do whatever they want, wrap it into their product, give it away for free if they want. So the challenge of giving up the capital was first we'd lose our financial capital, and then we'd lose our human capital. And then we'd have no reason to exist, and the company was going to zero. So the second strategy is hold the cash, but the cash is, cash trash. Ray Dalio says that is generating 0% interest, and the money supply expanded by 20% a year for the past 2 years. You can see it in U.S. single-family homes, which shot up 40% in price. And so, if the money's being devalued 20% a year, and you're generating 0% interest, you got a negative real yield of minus 20%. And I did the math in my head, and I concluded that pretty much the $500 million in purchasing power would be cut into $250 million of purchasing power in 36 to 48 months. And so in that situation, we decided we should do something transformational. So I kind of knew, I tried everything for a decade. I knew it wasn't going to work from first observations. So I thought, well, what if I could find a digital gold, which was better gold than gold, something that is better than gold, but also a big tech monopoly? And here are my 3 criteria. I want it to be a better gold than gold. I want it to be a big tech monopoly, and I want no one else to appreciate it. I want it to be underappreciated. And that's what Bitcoin was in the second quarter of 2020. No one thought it was an institutional asset, even though Amazon stock had doubled in the second quarter. Bitcoin was trading about the same as it had been trading in 2018 or 2019. It got up to 10,000, it had smashed down to 4,000, it was back at 10,000. So I looked at it and I said, well, based on all the information, you would think that a digital property network or a global digital money network is more valuable, knowing that people are losing confidence in currencies, losing confidence in central banks, losing confidence in governments. And this is a non-sovereign, open, decentralized system. So it struck me that the fundamentals were good,
yeah, you would think
but it wasn't appreciated.
Yeah.
So we're there and we have to take a risk. We literally have to, or we got to sell the company, right? We're done one way or the other. And I said, well, this is a reasonable risk because it looks like the Facebook of money or the Google of money in the year 2010 or 2011. While 98% of the world doesn't understand it, it's a bit too complicated, they're afraid of it. But just because you don't understand it doesn't mean it isn't true. It just means, and I had the experience of riding the mobile wave.
Yep.
And I'm the guy in 2011 that bought Amazon, Apple, Facebook, and Google stock, and they all worked out well. And I thought, the year's 2020, we're at the end of the mobile wave. So get off the mobile wave, get on the crypto wave. And think that through, so that kind of made the decision straightforward. It wasn't without risk, but the alternative was pretty much throw in the towel and just either get beat to death fast or beat to death slowly. And so we got into this business at that time, and of course, the last 2 years have been, I think, fairly good ones in terms of commercialization, institutionalization of digital assets.
To watch the full interview, check out the link in the description. What do you think of Saylor's thoughts here? Do you see Bitcoin eating $10 million per coin? Comment down below. If you are new to the channel or not subscribed, make sure to subscribe so you don't miss any videos.